Hi, I'm Peter Lundgren, founding CEO at Lundgren's Capital.
And I'm Mel Lopez, Chief Economist for ASEAN.
Welcome to Sound Economies with Mel and Peter, an East meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi Mel, how are you doing today, and how's your week been so far?
Hi, Peter. It's been great. Back to our regular weekly recordings. It's an exciting time. A lot we've monitored so far, and we've come out with several articles also on the Lundin's Investor Insights regarding these major economic developments. So, really
Great.
exciting week. How about you, Peter? What have you been up to?
Yeah, it's extremely busy, and that's only good. The year started in Manila in the office together with you in Manila, and the week after last week we were really on the road doing a lot of marketing in different
Mhm.
directions to different client segments. This week has been following up, and our high tech defense fund is very much in focus, and as the people really have a big interest in defense, so to say. President Trump got into the office, and there's a
Yes.
sort of it is creating a lot of interesting, maybe not moves, but just sort of interesting vibes and a lot of comments. Of course, we've been waiting for all these comments from Washington. So yes, it's a big melting pot this week. So,
Yeah.
but it's great. We have a lot on the plate as well. We'll start very locally with you. Comment on a bit surprised on the real estate market, and
Yes.
uh, is there spill over to other sort of neighbor countries, and then we move on to China. Very interesting today. The news coming out actually for just 2 hours ago.
Very fresh.
Exactly. Yeah. So we need to dive into these news that is important for Chinese stock market, and of course, we need to touch base on Trump. There is no
The
no
big
way
event.
around. Yeah. Very briefly, look at one of his most important members in his government and administration, that is the incoming U.S. Treasury Secretary, what we call
Mhm.
the finance minister in other countries. So, yeah, well, this is a lot. And as always, we end up with sort of what we think about the sort of the global outlook in a few sentences. Good.
Mhm.
Let's dive into a bit surprise in the Philippine real estate market.
A bit surprising figure came out from the central bank a few weeks back or a few days back. Residential property prices in the Philippines went down by 2.3% in the third quarter of 2024. So that's
Yeah.
that came quite as a surprise to market watchers because in theory it should always be heading up, right? And this is not a trend as far as neighbors in Southeast Asia is concerned. At least everyone's home valuations have been consistently going up. The last time that property residential property prices went down in the Philippines was in 2021, and that
Mhm.
was easily because of the pandemic.
Yeah.
So there's been such there's been some negative reaction. Now there are quarters trying to say or warn that, oh, is this an asset bubble forming, is it about to burst?
Mhm.
But
Mhm.
looking at the numbers closely, we're not too worried. First of all, it's one
Mhm.
quarter a decline, and it's not necessarily that huge, and it's not across building types. So this decline is actually mainly due to condominium prices in Metro Manila. And it's quite easy to figure out why. If we remember, just a few months back, the Philippine government banned Philippine offshore gaming operators. So these are like your online gambling service providers that are based in the Philippines from continuing their businesses here. So they were essentially driven out, and with that came vacancies in both commercial space and also a lot of condominium units, since these foreign nationals that are employed by these gambling companies are forced to go home to wherever they came from abroad. So a lot of them are actually Chinese nationals because these pogos, that's what they're called, cater to mainland Chinese gamers. And now they're out of the country. So understandably, that's where the decline in demand came from, and it was pretty sudden. It was announced in July, and they had to be out by December. So there's an immediate reaction that they had to flee, they had to leave. So that's where the demand mismatch is coming from. But it's not persisting as far as like for example what we saw in China where the demand was really down and residential price values have been dropping since 2022, so that's easily 2 years of consistent decline. In the Philippines it's just 1 quarter, so we don't see it as a cause for concern, we see it as temporary. And looking at the figures in neighboring countries, it's quite the same still. So for example, in the last 6 years, Philippine condos were saw their value increase by 61%. In Vietnam, the same period, it was 59%. So it's not so bad after all, Peter.
Mhm. Yeah, well, it was notable because we should bear in mind that the Philippine
Yeah.
economy is growing around 5% per year, yeah, GDP. It wouldn't indicate, as you say, that real estate prices should go down. But anyway, you trust it's very temporary, and we can link it into the gaming industry leaving the country. So we shouldn't worry, and certainly for the region, development is pretty strong still. So
Yeah.
we are all happy. The only thing is you rush out and buy you a cheap condo. Yeah, yeah, good. Let's move on to your big neighbor, China,
Yes.
and second largest economy in the world, always a bit on the radar screen. But we are sort of two things because we have been very excited to observe what would Trump do towards China. Yeah,
Mhm.
also the famous tariffs, and we had, as I think the whole world, the stock market had expected something to have been introduced already. But so far,
Hasn't happened yet.
Trump, yeah, Trump is he's pulling around, but in terms of tariff action, nothing so far. Of course, we'll zoom in on Trump in just a few minutes after China. So
Yeah.
let's keep that part for the Trump focus. And then the other thing about China that is out, as we mentioned today, just a few hours ago,
Mm-hmm.
is an announcement about the government basically not asking, but it's a change in policy. They demand that some of the life insurance mutual funds they increase the holdings of as a mainland China stocks, local Chinese stocks, to actually and to increase its holding over the next 3 years. Now that is interesting. Well, and what is it there? What is it they're saying?
Yeah, so actually, this is a pretty craftily timed policy change from the mainland Chinese government. So it's quite substantial. So the initial figures are estimating about half a trillion, sorry, yuan, or about $68 billion in addition, at least in additional investments. But the
Mm,
number might be closer to a trillion yuan. So it's a pretty sizable infusion relative to, although it'll be spread out in the next few years. But this is actually how China follows through its previous statement. I remember this was discussed in our October 2024 webinar on the Chinese equity market, right? So
exactly.
it was said there that the Chinese government is looking to provide or be more focused in supporting local stocks. And this is it.
Mm,
Apart from last year's policy on share buybacks, the relaxed rules on share buybacks to kind of preserve market values, this is another way to really uh, infuse additional trading, or encourage additional trading in the market at a time when stocks opened or started the year down. It's all really anticipatory with what Trump was said he would do, right?
Mm.
from 60% tariffs promised on day one. We've
Yeah.
seen day one and it hasn't materialized yet. So this is kind of being one step ahead of before it even if before valuations even go lower. Here
Yeah.
it comes with an additional support or additional boost to
Mm.
stabilize the market.
Exactly, yeah. As you mentioned, we've done some very rough estimates just to try to quantify
Mm-hmm.
what could be the effect. And if we say, okay, if it's 1 trillion renminbi or yuan, that would be around 5% of the market value, the total market value of the Chinese stock markets.
Right.
So that's not a lot. And again, as you mentioned, it will be spread out. And it's sort of a minimum targets we are talking about. It could also be more, but as a per year, it doesn't matter. It's like a max 2%
Mm-hmm.
increase in the stock price per year. So this is within what you would call normal daily volatility range in China. But the interesting thing is that it is a ongoing change and shift in the capital markets. First of all, um, the Chinese government would like the Chinese capital market to be more like in the Western countries, meaning
Mm-hmm.
if corporations they need capital, they don't borrow the money in the bank.
Yeah.
They go to the capital market and raise the money. So this is another sort of move in that direction. Very important for investors is that the Chinese stock market, domestic Chinese stock market today, is dominated by private investors, private savers, and nothing wrong about that. But private investors they go in and out of the market, and in
Yeah.
China it is much more and much heavier than what we're used to in sort of let's say the old Western markets. So this
Mm-hmm.
is why we've seen these extreme volatility swings now and then in the Chinese stock market, that private investors are simply going in or out, and they all run in or go out at the same time. And there's not so much sort of value consideration. It is much more momentum driven, and there's nothing wrong in hunting momentum.
Mm-hmm.
Um, but if you speak with a private Chinese investor, as a firm in Europe, the value approach to stocks means a lot, and US it's sort of half half. Yeah, if we take the European approach and speak with a Chinese private investor and saying, hey, this stock it looks cheap, yeah, based on of multiples and compared to the company valuation and blah blah. So you should buy it. And the Chinese private investor will say, no, it's going down. So why don't you sell it? this is, this is, so they're really momentum focused. And what will happen with getting huge institutional investors, as a pension funds, life insurance into the market, they have they have an extreme long view. So the long-term view, as of decades and decades ahead,
Mm-hmm.
means they don't do big shifts in the stocks all the time. They may adjust, but they stabilize the stock market, and that will be beneficial to attract more investors into the stock market, and it's also for sure what foreign investors would like. And these are important components in sort of getting trust back in the Chinese stock market. So it's actually very important what happens today. Uh,
And it's
um,
actually very conveniently timed, Peter. I remember when the last time Chinese stocks rallied, it was right before their October Golden Week. And
yeah.
now it's also ahead of another Golden Week for the Lunar New Year. So if this pronouncement really sends Chinese stocks way up, it could hold simply because the markets will be
Mm.
closed for a week. And that will look, fare really well for investors checking out Chinese stocks.
Let's see if this could give some upside momentum the next as also into the coming week ahead of the Chinese Lunar New Year. That is officially on the 29th of
Yes.
January, to mention that. Or if Trump, he will he will counteract and smash the whole thing. We don't know. Anyway, we should mention as well. I think last year argued for what we consider as Chinese stocks are low in their valuation compared to the rest of the world. Despite prices as the stock market went up in last autumn, we still consider Chinese stock market as sort of low in terms of prices, and it's one of the markets we could see going higher this year. It is not something that's it's not as we simply keep the same view on that one, also supported by today's action, basically. Yeah, China, that is interesting. But let's move on to to what everything is focused at, and everybody are looking at. That is Trump.
The big star of the week, Peter.
Yeah, yeah, yeah. Where should we start, Mel?
Well, I think it's really important that we start with how he started his term. So the past few weeks, he's been really saying that, oh, on day one, I will impose the 60% tariff on China and the 25% on Mexico and Canada, but it didn't happen. So
Mm.
that's really one of the major ones, Peter.
We have, of course, just as excited as anybody else, been awaiting what should happen, and it seems like he has a more clear vision and plan when we talk about domestic US. He's promised the voters to do something about the Mexican border, the illegal immigrants, and there's already taken action. That is no surprise. Maybe a bit more surprised was how tough he wants to move on the drug consumption as also the organized
Right.
criminal gangs in US, when we talk about all kind of drugs, so to say. Yeah. That is interesting, and that he can control, and as he can do some action. It is domestic US. It won't change the economy and sort of investment flows, but it is surely a good thing for the society, and long
Mhm.
term also, of course, good for the country. But as when we sort of seeing about sort of going to the foreign part of Trump action so far, I see him as he's been bullying around and chatting out to different countries now this week, and see what happens. Do they punch back, or are there any reaction? Yeah, that is typical Trump. And then he is also he is super opportunistic. He doesn't necessarily follow a long-term plan that he has made for 2 years ago.
Mhm.
He takes the actual situation and say, okay, I think he has a priority, and in his world, it could very easily be that the highest priority is actually try to get Russia to stop the war against Ukraine, or get into a ceasefire, something,
Mhm.
because that is costing the US money every month. It's very expensive. So to stop that sort of hole, that would be beneficial for him from day one. To get Russia to go into a conversation, I think he has tried. We can see that in sort of when we follow the medias, but Russia is not reacting. Actually, they're staying cool. Trump, again, as the super opportunistic person he is, he might need China to go in between at some time. So it would be not that smart to start to hammer China with extreme tariffs, and then afterwards say, hey, we need your help to manage Russia. Yeah, that could be difficult. In his own prioritization, there's something going on saying, okay, it might be more important to try to get Russia to stop the war, and then we can try to deal with China afterwards. Yeah.
I think that's why he gave a reprieve to the TikTok ban of Biden.
Yeah.
If anything, that may be a big bargaining chip that he can use in
Mhm.
speaking with China. So it's quite it sounds funny when you say it out loud that, oh, they're using TikTok as leverage, but it is a big business. It's a major business, and it could pave the way for those conversations to get rolling, basically, Peter.
Yeah, we follow closely because every time there's a comment on Russia, that also implicates how could he, as a Trump,
Mhm.
act towards China. Another thing that we have noticed
Mm-hmm.
that we also, in terms of when we talk about tariffs and taxation, that is, it's actually on the homepage somewhere on either on the White House or wherever, and it's a comment that nobody 100% can explain, but it
Mm-hmm.
has something to do with the taxation of foreign companies that are active
The
in the
US.
US. We see it as the risk is Trump will pull US back from also sort of international tax treaties or tax sort of cooperation and simply introduce a taxation, a special taxation of foreign companies acting and being active in the US.
Mm.
This is a risk. We don't know, but it's our sort of consideration that could happen. So what investors should be aware of is, of course, if when they look into the stock portfolio, is none as a companies that are domiciled outside US, as it could be European companies, Asian companies, if they have very strong sales into US and they have big production facilities, as are very dependent on the sales into US, they could explore an extra taxation of the activities in US. That is a risk we see. It's the best way we can sort of consider these comments. And that, of course, means that the net profit for these companies will go down. So yeah, that is worth to keep an eye on, we
I
think.
understand the fear about Trump, the very real fear that Trump could pull the US out of these tax treaties because he's withdrawn from the WHO, right? The World Health Organization.
Mhm.
He did that
Yeah,
before regarding the Paris Agreement. So if he does consider it, it just might happen, Peter.
yeah. It stays exciting. We're excited. One of the most important members of his government, the
Mm-hmm.
Treasury Secretary, the Finance Minister. That's important in any country. And that's a new name now we need to learn. Scott Bessent, flying directly in from Wall Street, have served at mainly served at the hedge fund business.
Yes.
Also, together with the very famous George Soros. So he's a big name, Scott Bessent in that industry. How he will act as a Treasury Secretary is, of course, always extremely interesting. He is a strong supporter of what Trump is proposing with tariffs, taxations, and also how to try to counteract inflation. It's a true Trump lieutenant. But what we always look at as the very most important is what does an incoming Treasury Secretary in the US say about the US dollar? What he has said so far is he agreed that the US dollar should remain the reserve currency of the world.
Right.
Now, that alone indicates that they acknowledge such as a reserve currency to be stable, yeah, and also a certain strength. But what we always look at is if the new Treasury Secretary also confirm that the person supports a strong dollar policy, and so far he has not done. But he is not in the seat yet. He is actually into the last hearings today, I believe, actually.
Yes.
But he has gone the first approvals. So he will be in the seat, and but this will be sort of when he goes public and do speeches here and there, then he will probably also be met with his view on the strong dollar policy. We will listen very carefully because we should remember that the dollar right now is actually pretty strong. Also, if we look into the past 5 years, if he should say something else, I expect the dollar to drop 5 to 10% within very few days, and that is a lot nowadays.
Yeah. But Peter, um, I it's gonna be interesting also to see how he will balance Trump's policy for more, trade protectionism, but at the same time, you want a stronger dollar, you want to manage federal debt better because they're hitting their debt ceiling. I think if they've not already hit it this week, right?
Yeah,
So he has a very interesting job to do under Trump.
it's, he has his hands full. Yeah, they are outspoken in sort of fighting inflation. Yeah,
Yes.
Trump, and but also his Treasury Secretary. That will be interesting to see how they Basically, as a government, they can only fight inflation one way, and that is to lower public sector spending.
Yes.
That way around, they will lower demand in the economy, and that also lowers GDP growth. And so that is interesting. If they want to fight inflation in other ways, they can try, but it won't work, and it will be sort of a managed economy in the end, and it's a bit what people have tried in Europe, yeah, and of course it doesn't work. So that is very interesting. Okay, and we need to jump to the global outlook, yeah.
Yes.
So how happy are we? Tell me.
Oh, in my side of the world, Peter, it is exciting. Everyone's waiting for, mainly China is waiting for what happens next in terms of Trump and global trade and global demand. So far though, we are liking what we see. We are not changing that. And this very recent news about coming out from mainland China assisting the stock market is very helpful as far as market sentiment is concerned. So let's see if it lifts the stock market in the next few days. I think stocks are down 2% so far, but it's still very early into the year, Peter. In
Yeah.
your side, Peter, how's it going? What are we seeing?
Yeah, as we stay with the view we like risk, meaning we overweight stocks and have a lower weighting to fixed income, to bonds. We know there's a Trump around, yeah, that can generate some volatility. That is yeah, that is taken into account. We can live with that as long as we can explain it. Could he hit badly towards some economies? Yeah, he could. But these economies are also able to maneuver. So it is, as a Trump is deciding less than people expect. He can win some stuff, yes, but he is after all deciding less and on the global economy than the market fears, I believe. So we are still happy. Again, we see a few clouds on the horizon. We are talking about 6 to 9 months ahead, and that is due to that we won't see that many rate cuts further going ahead this year. So this tailwind for, in particular, the stock market, but also the bond market is sort of fading out. So there needs to be corporate earnings. There needs to be good, and again we acknowledge that the tech stocks are weighing heavily in the stock indices, and so it means we need to have basically more a view on the tech stocks than anything else. But so far we're okay. Volatility is higher. Could we, and that is something we need to, as we are looking more at internally. There will be a sell-off in the stock market at some time, maybe this year, and that could be a steep one, 10 to 15% at some time. But it is a sell-off. It is maybe a correction, but it can be that the stock market goes up another 10% before we see that. It's nothing. We would not step out or reduce our risk right now. We just see it can come, but it's not because it changed our world outlook. So we focus on the sunshine, and that is making that have the overweight. That is where we are right now from the start of the year. Good, Mel. It's been great you were on board. Thank you for your time again, and also thank you to the listeners out there. We're happy that you are listening. Thank you for that. We'll be monitoring global developments and will share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Lundgren's Investor Insights. Thanks for tuning in. For expert insights on the go, download the Lundgren's Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top-rated mutual China fund. To know more, visit lundgrenscapital.com.